Hey everyone, this is Vlad. You can find me on eToro as VladB35. I'm the silly behind silly markets.
And I am Levi. You guys can find me on eToro as Lizzie Apukaya, and I'm the guy behind Bullbrain.
For the next 30 minutes or so, join us for some hopefully intriguing conversations about what drove the markets.
And also what to expect going forward.
Together, we are the Silly Bulls.
We are 2 weeks into 2022. Imagine I just came back from a holiday, right? I don't know what happened on the markets. Just give me a brief rundown on what's going on.
Yeah, I mean, this week has been not particularly good for stocks, at least in the beginning of the week. Because, yeah, the topic that everybody's tired of, including me, inflation. And what's driving inflation? Well, first of all, the Fed and the monetary policy in the US. The markets seem to be pretty much at peace with the Fed, with the accelerated tapering, with the accelerated pace of the rate hikes. On Monday, Goldman Sachs, because it's Goldman Sachs, so everybody will listen to what they're gonna say, turned a bit more hawkish, and they said that they expect the Fed to have at least 4 rate hikes in 2022, while everybody was expecting 3. And yeah, they're also expecting the reduction of the balance sheet from the Fed to start way earlier. They expect somewhere in July, which is way sooner than the initial forecast of December. I'm curious, Levi, what about you?
This topic is on the table for, I would say, at least 9 months. The kind of narrative that comes from the Fed and the kind of narrative that comes from the investment banks, such as Goldman Sachs, is that they are still not expecting inflation to run away. They're still not expecting inflation to become a major problem. They admit that some rate hikes will be necessary. Obviously, Goldman Sachs says they expect 4. The Fed says that so far they were calculating with like 3. But the thing is that I think that most people overlooked in the last couple of weeks is that the Fed just quietly admitted that they were fucking wrong. Okay? So the way I see it, after being a bit long-winded on this topic, is that we still can't really take the Fed's word on a face value on this question, because first of all, we have no reason to trust that this time they get it right. Everybody talks about how many rate hikes we're likely going to have this year or into next year, and nobody really tries to estimate the rate of these rates. So how big steps and how big raises are we in to expect, right? If the Fed makes 4 rate hikes this year, and all of them turns out to be 0.1, 0.2, at the end of the day, we are talking about an interest rate that is still around 1%. Is it enough to handle the inflation? Is it enough to deliver the very purpose why the Fed decides to start raising interest rates?
Yeah. So my idea, I was also reading these analyses from some strategists, and I mean, the Fed, Powell actually is reinstated this week. He has been reinstated in front of the Senate, so his seat is still warm for him. In front of the Senate, he has actually said, like, plainly that we will increase, we will accelerate our rate hikes if needed. So at this point, the chairman Powell doesn't need so much sympathy as he used to need. So I think right now he will take some actions. And also, coming back to that point, so the strategists are actually seeing, so they know that the market is in a tough place. And they know, as you said, the markets are acting as they think that the Fed will act. This strategist, I can't remember his name, sorry for not giving credits, but he actually said that what will be very interesting to see is how much of a pullback can the Fed take in before actually taking some, taking again some easing action. So what I think going forward will happen, the Fed will actually do their stuff. They will actually do what is needed to be done, or at least what they think they can do, and won't regard the market so much.
And I think this really takes us to a very important question that we wanted to get to much earlier. We just spent a lot of time about this whole inflation topic, and then again, still lots to be told about inflation. So a significant portion of the people is deeply into tech and growth stocks. Obviously, this was the song for the last 2 years in this huge rally. But now tech stocks are struggling. So I think we just kind of arriving to the first key question we wanted to discuss in this first episode is like what's about to happen with tech stocks going forward in the 2022, or can we expect the rally to resume? And can we say to all of our 3 listeners that you guys rest assured your positions in Facebook, Microsoft, Tesla, Unity, whatever you call it, tech focused growth stocks, rest assured they're going to go flying again? Or is there something else on the horizon for this kind of assets?
All right, so again, broad question. No, so what I think is going to happen, big tech, I mean, as you said, Facebook, Microsoft, Alphabet, and so on.
Yeah.
We know that they've been the main driver behind the rally of last year for S&P, for Nasdaq. I mean, S&P finished the year on 26%, Nasdaq finished on 22%. Those are astronomical numbers, but those are mega caps. And I think investors took this run to safety approach that took these stocks maybe too high, too quick. Still, I think that they are still the preferred destination for a lot of investors, because growth stocks like small caps, mid caps, those might still be seen as too risky. And I personally think that tech will be one of the biggest losers, at least in the first half of 2022. Hope to be wrong or not.
What's your exposure to tech right now? Spot on question. What's your exposure to tech right now? Give me a ballpark figure, percentage of your portfolio.
US tech, not so much. I would say around 10%. But then I still have a lot of exposure to Chinese tech.
Yeah.
Which to some extent they are related, of course, also because a lot of these Chinese tech is listed in the US. But no, out of my exposure, it's Intel, it's Microsoft, and very little smaller caps, tech, small caps. But no, coming back to that question, I think tech will still suffer, and I wouldn't put too much money on it. Of course, I'm still gonna retain some exposure to it. I think it would be foolish at this point. I mean, tech has been in this continuous rally since forever. Some periods were better, some periods were worse, but it's still, I mean, tech is around everything that we live.
Yeah, I wouldn't put too much money, if at all, into tech stocks going into 2022. Beyond, of course, because we can see that tech was flying for a good while, and I do believe that money will flow into the kind of stocks that what you just said are these stocks basically are focused on and centered around what we do, how we live, how we work, how we communicate, how we do everything. There is this big, huge buzz thingy going around the metaverse. And obviously that's another sub-segment of the tech industry that could deserve a discussion on its own, which I think definitely going to get to that as well. But given the macro outlook in terms of economic outlook and what we just discussed about the potential rate hikes, but again, all these things, all these factors put together makes me say that I totally agree that I'm not bullish on tech into 2022 at all. I have a few exceptions, a few companies that I'm keeping an eye on that are I think going to do well, and I'm happy to take the pain because I already hold a position. But yeah, tech doesn't seem to be the place to be. If tech is not the place to be in 2022, then what is the place where people should put their money into 2022?
Well, in my opinion, if you're gonna go for the narrative that inflation is not gonna cool down anytime soon, I think there are three main places to put your money into in 2022. First of all, basic materials. That is my biggest bet, and I'm most hopeful for that one. And to explain this, if we have higher prices, higher inflation, then companies along the supply chain will hopefully want to pass on these extra costs to the consumer. But that's more easily said than done. To some extent, they will do it. To some extent, they won't be able to do it. So the basic logic is, why not go straight to the point, straight to the origin of the problem. If you have one bar of aluminum which goes all the way into a power line, why not go and invest in the aluminum itself or the company that's producing that bar of aluminum? So that's first. The second one is food commodities. I'm gonna keep it short. We need to eat. Prices will go up. Again, prices won't be able to be passed on to the consumer totally. So again, go straight to the root. And thirdly, this is not necessarily because of inflation, and I'm kind of going a bit off rails here. But third is gonna be China. This might be a bit biased view of mine. I'm heavily invested in China, but because of the 2021 that China has had, yeah, they have to rebound, and the whole macroeconomic environment is pointing towards a healthy 2022 for China.
Agreed, and agreed.
But on top of what I'm bullish on, my question to you is, what are you bullish on, and what are your takes for 2022?
There are three other areas three other main areas that I'm particularly bullish, and obviously a few smaller ones. I wouldn't overlook oil and gas. Hopefully, at some point, these things will go away, but it won't happen overnight. So that's what I think people should understand, that the fossil fuel industry won't disappear by tomorrow or by next month, or not even in 10 years or 20 years. The reason being is because the world's energy, 81% of the world's energy is still provided by fossil fuels. And I stop right there. I don't want to turn this into an argument between these sides. The point is, the way I see it, there is a structural change happening in the supply side of fossil fuels. So what do we have on the supply side? We do have OPEC and OPEC Plus, including Russia mainly. These guys are getting into the very end of their spare capacities. It seems like they don't have the kind of spare capacity that they're tried to make the world believe previously that they have. They're continuously undershooting their quotas and their production targets. Some of the OPEC member states don't even have, they have serious issues with maintenance and investing into just either keeping their production levels on the same level that it was before, like pre-pandemic, or even try to increase that. So the demand is high, the supply is low, but this time, unlike other times in history, this time the supply is not artificially low. It's low. This is it.
It's truly low.
It's truly low. There are not enough investment into oil and gas because oil and gas is evil. People don't want to. Nobody wants to fork out hundreds of billions of dollars to invest into drilling new wells and anything. And I could totally get that. No one wants to be the face in a political campaign of, hey, I'm the guy who still supports financially this evil industry. So everybody backs off. And this creates a situation when there's not enough money on the supply side to invest into new resources. Here we are. Oil is trading at $83, $84 as of last Friday. And I personally think that the price for oil is to head to even higher, much higher, even surprisingly high in 2022. The same for gas. Just a very quick thought. Look, I try to keep this as unpolitical as possible, but we all know what's going on in the Ukrainian border. What's the standoff between Russia and the NATO and the US on this whole thing? Surprisingly, the news headlines are start to talk about how Biden is preparing and talking to energy industry companies to help Europe with gas, just in case something goes wrong between Russia and Ukraine, and if Russian supplies stop all of a sudden. So I don't want to make any comments on this. Everyone can have their own opinion on what's going on in the background, but I think that there is a huge gap between the natural gas prices in Europe and in the Henry Hub in the US. And if the US starts to produce for export or increasing export, mostly primarily for Europe, then the current price of $4.2 is unsustainable, and we're likely going to see another bull run back to the 5-6 range, maybe even higher, depending on how the weather plays out, either in Europe or in US. So that's about the fossil fuel industry and oil and gas thing. Very interesting.
Let me stop you right there, because you talk so much. I mean, I love these rants of yours when you get really passionate about oil. Yes, I know, guys, he's not the devil. No, but I've got two insights. So first of all, on oil, everybody is going, hey, no more oil, let's all go green. The problem with this is that the current state where we are right now, it's impossible to go green totally, first of all. And second of all, I've read an article, a forecast from, I think, Bloomberg. It said that the transition towards green through 2050 was worth, we would need $173 trillion for this whole transition. To put into perspective, that's...
He said trillion, that's a T and an R. So that's shitloads of zeros followed by 173, following the 173.
Yeah, so that's, to put into perspective, that's more than double the current GDP of the whole world.
Exactly.
It's a shit ton of money.
It's a shitload of money.
It's a shit ton of money, and it's a shit ton of oil that's needed to extract the minerals. It's a shit ton of oil to build the machinery. It's a lot.
And again, this is something. Sorry, carry on.
If we were, I also read like a supporting article of this. If we were to go, okay, all in, we just drill everything and we build this overnight. The levels, I mean, the sudden levels of emissions from this would actually kill us.
Yeah.
So yes, we will go green, but we will go green slower.
That's very interesting.
Hopefully the pace of global warming and the bad effects of oil will not be faster than the pace where we're going towards the green transition.
Yeah,
that was the first one. And the second one, I think Biden is to go back to natural gas. I think Biden is just trying to play the cool guy, because in no way possible US would be able to provide Europe with the levels of gas that's needed. Just think back, I think it was 1 or 2 years ago when everything froze in Texas.
Yeah,
I mean,
last February.
Exactly the patterns, the weather patterns are becoming so erratic that even Texas froze. I mean, come on, guys, where are we here? The energy prices in the US are already through the roof. Biden is practically begging OPEC to please release some more oil. He started releasing some oil from his own reserves.
The strategic reserve, yeah.
Exactly. He's begged China, he's begged Japan, India to help. Okay, please release release some more barrels of oil into the
market,
into the economy, so that the
yeah,
prices would go down a bit into the market. Exactly.
yeah.
So that goes the same for natural gas. There's no way possible that he would be able to export natural gas to Europe.
I totally agree. And despite I would love to get into that convo, because I can turn also passionate about that insane board game that's going on between these powers in the background: Russia, Europe, the US, China. What's going on, but what's truly going on, because exactly what you just explained, what happened towards the middle of 2021, how Biden started to back for OPEC, which on its own was a super surprising thing from a sitting US president to do that. How the US oil industry reacted to that, and all these things that go into that conversation, all the way to how the US opposed the completion of the Nord Stream 2 gas pipeline from Russia towards Europe through Germany, who is actually decommissioning its nuclear power plants to replace them with gas, which is also another interesting angle to the same story. But again, I stop right here because we can create an episode, guys, if you're interested. Comments, geopolitical shenanigans and nonsense and what's really going on. But this actually takes us into the next to the original question. You said what I'm bullish on, and I just mentioned right now nuclear. Nuclear is super interesting, and I'm gonna try to keep this short and sweet. As you guys can see, I'm not that's not my strongest suit. Nuclear power generation is still a huge debate between people if it's green or not, because it's emission free. So there is no, there are no carbon emissions. It's not harmful for the environment as long as the nuclear waste is stored in a way how it's supposed to be. But we can get into this conversation. But the point is this transition towards a sustainable future and a green energy, and a transition away from fossil fuels, seems to be quite tough task without at least maintaining nuclear energy generation. And again, the nuclear market, the uranium market seems to be ripe for another bull run, given that there are countries around the world, from China to Russia to India to South Korea, and also some countries in Europe, actually half of Europe. Uranium demand seems to be picking up. Uranium supply is suppressed, especially now we have this trouble in Kazakhstan, the world's largest uranium producer. Things seem to be very promising and still very undervalued on the nuclear energy generation side of things. And the last thing that to give you a third bullish place to spend money on is shipping. Still shipping. I know that even I think we had these conversations and with the rest of the bunch, and I get this from people. How can you be bullish on shipping when we just saw a year, a huge bull run for shippers?
300%. What was that?
300%. I mean, come on, seriously. The cryptos did a thousands or a tens of thousands percentage run, and people are still bullish. So I think it can be. The reason being is that what people forget is that these shipping companies have an incredible pricing power. And it's not obvious for the first look, but if you think about this for a second. The shipping industry was beaten down and hated by everybody on the market. No one did invest in the shipping industry in the last 10 years before the pandemic messed things up, right? Shipping a 40 feet container across like the standard China, US West Coast route was down in around $1,000, something like that, even less, in 3 digits. It was super cheap. These kind of companies were either generating loss or just very, very slight profits. Okay, so when the pandemic first kicked in, these companies obviously first became scared that the economy is coming to a standstill. So what they did, they removed capacity from the market. They removed their fleets to at least just maintain prices. Obviously, the pandemic proved them wrong, and because of the huge demand for all kind of products, shipping rates, shipping rates skyrocketed. So these companies, they put back their fleet back to the water. But here's the thing: back then, when they first did that, when they first removed the capacity, it was a risky move from their side because their balance sheets were crap, high levels of debt, little levels of revenues and profits. Obviously, this has been changed by the pandemic. The same companies we're talking about here, either we talk about the large ones like Myers, we can talk about the little ones like Zim, one of my favorite. Now these companies are sitting on piles of cash. Their balance sheets are bulletproof. These companies are shitting cash as we speak, and they're still super undervalued. Imagine if there's a turn down in demand. Okay, what will these companies do? They remove capacity from the waters again. These companies have the power to artificially keep the shipping levels high, not this high as we see it right now, $9,000, $10,000, but maybe to $5,000. But that $5,000 is still 5 times more than the 10-year average. And these companies will still generating free cash flows in unprecedented scale. So again, as you say, I'm passionate about my bullish investments. If anyone asks me, name one industry and just one industry I would put all my portfolio into in 2022 and forget about it, that would be shipping.
Yeah, no, I mean, I understand your point also because, I initially started looking into shipping industry somewhere in Q3 2021. And back then I said, okay, very strong bull run. How much steam is there left? I still understood the risks that the supply chain industry is facing. So I said, okay, there still is steam left here. As you said, companies are sitting on a lot of cash. So what they did, I mean, you see companies, as you mentioned before, Zim, who have just increased their dividends to astronomically high figures. I think Zim is on 18% dividend on top of their special dividends, like one-time things, because they have so much cash, they don't know what to do with it. But still, I was afraid and I said, okay, there is some steam left, but it's limited. And my view changed about that because, after our talks and the articles that we read, we see so much congestion in the ports, in the international ports, that it's impossible for these issues to be resolved in the short term. And in shipping, stuff moves way slower than in other industries. We've had the Suez Canal blocked for 6 days, and that has had ripple effects throughout the year. To pick up the pace again takes a lot of time. I remember the US made these marketing stunt saying that, our ports are now way freer. We don't see so many ships being delayed in our ports. Whereas in reality, the ships were just standing outside the radius. I don't know, 50 miles, 150 miles, something like that, away from the shore, so that it didn't seem that they are being queued in the port. Now we see a very high congestion in China, in Shanghai, that's the world's biggest port. And again, I mean, here are a lot of factors at play. But the bottom line is that the shipping industry will take some time for the shipping rates to come back to normal. So again, agree with these. 2022 could be the place for shipping industry.
Absolutely. And I just want to add one thing, just to connect the oil and the shipping industry together, because people say that if the oil prices are high, that's not good for shipping, because obviously shipping companies spend more on fuel and this kind of argument, which is fundamentally right. But but that's not the key point. The key point is that, and as I said, in the oil side, the demand side, people are obviously know that there is not enough demand from jet fuel because planes are not flying because of the COVID situation, right? But there is another aspect that people easily forget about, is that hundreds, if not thousands of ships are at anchor at ports all around the world, not only in the US, but also, as you said, in China, in Europe. So this port congestion is a global problem because of the troubles in the supply chains that happened in the last couple of months. These ships are not consuming fuel right now. These ships are just standing on anchor and waiting to be offloaded and unloaded again. So there's another significant portion of oil demand and fuel demand is missing from the demand side at the moment because of that. And if that returns, so once these congestions clear, God knows when, 6 months, 12 months, 2 years, that will automatically bring back this kind of demand on the oil and the fuel side. But yeah, that's it. So again, almost every factor points towards a bullish outlook at here, I think. Yeah, this just took us back to talk about oil and gas again. It was unplanned, but now that we are here, there's one thing I wanted to ask you about, because I remember you told me about this event earlier, and I started to look into it, but obviously you are much deeper into researching the implications. And this event has nothing to do with the Fed and inflation and the dollar and all this kind of usual stuff. So there was a volcano eruption, a massive volcano eruption in the middle of the Pacific that was like super huge. And I remember you told me about this, and I looked into it. But you also told me that you started to look into the long-term implications of what this could mean to the whole world, basically, but particularly to oil and gas and commodities. So just fill me in, bro.
So what has happened is, in the middle of the Pacific, an underwater volcano erupted, and this has been perhaps the biggest eruption in 250 years or so. 200 years anyways. It was massive. The plum of it was clearly seen from space, and the imagery is amazing. Look it up. It's frightening, but it's amazing. Just understand the size of it. It was about 30 kilometers big, and the sound blast from it could be clearly heard from Sydney. That's about 3,600 kilometers away. From Houston, that's about 10,000 kilometers away. There were tsunami warnings issued for California, and beaches were affected. In Fiji, that's about 700 kilometers away, the blast is just blown open the doors there. It was frightening. I mean, supposedly frightening. I have not been there, thank God. But what this means for the planet going forward, and of course for the markets, because that's why we are here to talk. Usually after such a massive eruption, you have a lot of particles that are in the are released in the atmosphere. You have ash, you have a lot more gases, and these tend to cool down the planet by a few degrees. And this is because these particles that are released in the atmosphere, they are blocking the sun rays. I just found out about this. And it usually takes around 2 to 3 years for the planet to get back to normal. In the short term, these affect greatly food crops. So, as I said before, I was already bullish on crops, also on food commodities, corn, wheat in general, because of increased prices. But now, to put on top of the energy crisis that we're facing, we also have this catastrophe that has happened. I would expect really, really bad crops, so very scarce production. So yeah, unfortunately, very high prices. And also because the planet tends to get cooler, because of this would mean that we need more fossil fuels to heat up households, to heat up the planet. In short, I'm expecting the prices. I mean, on Tuesday when the markets get back open, the prices to skyrocket. And if they don't skyrocket, I know for sure that I'm gonna be piling up on these commodities.
It doesn't really seem that the market or the people are picking up on this, the significance of these news. Like, seem to be that nobody is connecting the dots here. Nobody is connecting the dots that if we have a major volcano eruption, and if it's on this scale that could, put so much ash into the atmosphere that will definitely impact our food crops going forward. So that's a super interesting thing to look into.
No, I mean, of course, the markets did not, and the news did not pick this up, because today Djokovic was deported from Australia, which is way more important news.
Absolutely. I mean, I'm so super. Who is Djokovic?
Yeah, tennis fans look away. Djokovic is the #1 tennis player.
No, I know who he is. I think I know. I saw him a couple of times, but yeah, totally with you on that. Like there are so many. I'm not sure what sort of news I saw this morning, but I'm definitely sure that there's most of them was less significant and less important than possibly or potentially this volcano eruption is. And I think on this note, is we can just say that it's time to wrap things up, guys, because
I was also thinking about this.
Here is the thing. Vlad and I decided to come together and start these series of discussions, and we said we're going to make 10-15-minute episodes, and now we are talking for about an hour, but all this kind of nonsense. Some of it is definitely a nonsense, some other parts are not, hopefully. Otherwise our portfolios are fucked. But just to wrap up what we said, inflation is still a center stage. Inflation is getting boring, but we need to address it if we want to stay on the top of our games. What it means to tech, what it means to growth, in our opinion, is possibly negative and bearish into this year, but we understand that many of you guys out there are heavily exposed to these sectors, so fingers crossed that this, the damage won't be that big. If it is, just hold on to your willies, because after all, things should go, you know the drill. On the other hand, we are bullish on things that most people are not. So commodities, raw materials, food stocks. So again, soft commodities. On my side, I'm more into oil, gas, energy, shipping. These are the things that we are investing into. And there was a volcano eruption that should deserve much more attention from people than it actually got, which it might have significant implications to the world in the next 2-3 years at least. This is it. I think we said everything we could have said for the first episode. More to follow, hopefully. Leave us a comment if, just let us know how much do we suck or not or whatever. And oh yeah, important thing we said about this eToro stuff, so and the usernames. If you guys want to learn more about these ideas, analysis, how we come to our conclusions about, China, I forgot to mention China, or shipping or whatever, both of us do write articles about these topics at least on a weekly basis. You can read these on Vlad's site, that is sillymarkets.com. Mine is bullbrain.com.
All the links.
All the links down there. Go to eToro if you're not there yet. Find us. If you like what you see, you can start copying us. If we make money, you make money too. If you lose money, well, yeah, that sucks. Then you lose money too. But so far so good. We are both happy to say that in the last couple of years, we both returned some juicy profits to our copiers. So there's not to be ashamed on that side. Yeah.
We've beaten the S&P, which is the toughest thing to do.
This year, the last year you did, I didn't. I was 20% up or 21% up, but the year before I banked everyone with 240%. So
exactly. So I think you can rest and not lose any sleep.
See, that's what I said about no self-promotion. Okay. All right, guys, that's it. We're gonna bugger off, and see you guys next time.
See ya, guys.